Some of Latin America's top CEOs and investors are gathering in Miami Beach today for the LatAm Tech Forum. Our Robert Frank has been speaking with them about the impact they're seeing from global trade uncertainty. Robert?
John, great to see you. Well, in fact, more than 400 of the top CEOs and tech founders from Latin America gathered here at the Riverwood Capital Management Latin America Tech Forum. And the big theme is that America's loss is Latin America's gain. Their currencies are up, their economies are up, and because many of these countries run a trade deficit with the U.S., very few of them got tariffed. In fact, Mexico, which thought to be perhaps getting the biggest tariffs, getting off rather lightly. We spoke to the CEO MercadoLibre. They are now the most valuable company in all of Latin America with a market cap of over $110 billion. And he said that this new global trade landscape will benefit Mexico and Latin America, possibly for a long time.
This is clearly a very big opportunity for Latin America in general, I would say for Mexico in particular. There's going to be, I think, a bit of a permanent shift. I don't know how it's going to end, but I think the situation where everything was manufactured in China, consumed in the U.S., and China buys T-bills and in a way finances that, I think that dynamic is kind of over.
And John, you know, they're often called, MercadoLibre called the Amazon of Latin America, but they're actually doing much better than Amazon this year. Mercado's stock up about 25% year to date. That compares to Amazon down 15%. Now, they are getting more competition from Shein and Temu and some of the Chinese competitors, but also one of the big themes here, John, is that Chinese tech companies have actually become major acquirers of Latin American tech companies. For years, it had really just been the American tech companies that were the big buyers here. So that's another sign that the Chinese are kind of displacing the U.S. when it comes to tech. One more thing I'll leave you with is that the family offices that are here still see the U.S. as an attractive place to invest at least their own personal money, even as their companies benefit from being completely decoupled from the U.S. at a time when the U.S. is going through so much trade turmoil and economic uncertainty right now.
Interesting, Robert, and I can't help but notice, though we're talking about outside the U.S. and Latin America, they're still meeting in Miami Beach, and I think, you know, Miami is to Latin America as Hawaii is to Asia. Could Miami and the wealth picture in Miami stand to benefit if these folks are right?
Certainly. A lot of the folks I talk to either own real estate here or buying real estate here. And as you mentioned, I asked them, well, why are you having this conference? If many of you don't serve U.S. clients or rely on U.S. capital, why are you having this in Miami? They say Miami is the neutral country in Latin America. So that will certainly remain.
So you expect that to perhaps benefit real estate. It's also become a little bit of a crypto destination, which I guess in its own way is also neutral.
Absolutely. You know, what's very interesting is that crypto has a lot of big following in Latin America because if you think about what this region has gone through in terms of inflation, devalued currencies, it's no coincidence that a lot of these young tech founders from Latin America are big proponents of crypto, big proponents of what they've seen, let's see, the president of Argentina right now doing with crypto. And so that is a big part of both the investing as well as the startup community in Latin America, and also, as you know, in Miami. So that's another big shared experience and economy between the two.